Hi, everybody. Wow, what a rough commute to the office today. Oh, traffic was terrible. Oh, hiya, Brock. Yeah, how are you? Oh, shoot, I forgot to take my robe off before I went to the office. Anyway, helloinvesting.com. How are you? So one of the advantages of being a trader, good Brock, the commute. So, day before NFP, doesn't make sense to do a lot in front of it. Maybe maintain what you have. Yes, it held the level that we talked about, Shahab. And you know what? It's done it in the face of a weaker yen, stronger US dollar yen. You're very happy. Don't tie your happiness to a trade. Let me coach you. You want to get to a point where every trade is just another. And, not doing cartwheels when things are working and going fetal when they're not. Capiche? That's where you want to get to. Or else you'll have to play Hendrix's Manic Depression's a Frustrating Mess quite a bit. So yeah, gold held up in the face of rising US dollar yen, which may be stalling here. 110's a big number. And, strong jobs number we could blow through. One thing I did want to point out is when you look at Euro right here, and I know it looks like it can fall off a cliff, but we have an inside day. And if we stick with an inside day here in front of the NFP, and my point being, if I'm looking for anything that said that there could be one more pullback in the dollar, which I'm still looking for, is that the euro is holding previous last week's lows or the week before lows, and the Dixie took them out, right? Okay, probably a lot of cable weakness. And at the same time, I know everyone is saying we're going to par, and maybe that's true that we're going to par, but, we could pull back here. We could still pull back to 96.5 and go to par. So, don't marry, you can marry a bias and a long-term objective, but don't trade it, okay? Don't trade it short-term. Go with the flow of the market. So, with that being said, S&Ps, look at this daily divergence, and maybe we have a blow off. I know there were some people talking 33.60, but this is pretty glaring, isn't it? Here we are at new highs with a 61 reading. At all the other reaction highs here, there wasn't tremendous divergence, right? There wasn't tremendous divergence. There was barely divergence. Here there was none, and this was a pretty good sell-off, right? But look at this. So, I mean, it would take a lot for the daily to get up over 70. The short-term stuff is, right? So that's that. And, even though we're getting a pullback in TLT, okay, I mean, it was one heck of a move. It's still a huge breakout. And I don't think this is it for bonds. It could be. Blake showed it at major resistance. I'm thinking that we have a breakout that measures new highs, and this is just a pause. It would be more bullish if it didn't get back to 38. Maybe tomorrow the trade is on a strong number. Buy bonds, sell S&Ps, and sell dollar strength. So that's what I'm thinking about doing for tomorrow. You know, don't try and predict the market reaction on the NFP tomorrow. And ADP was giving us kind of an indication that perhaps we're going to have a strong number. So I don't play roulette. Okay, I react to it. It's binary until it becomes fact. So we'll see what happens tomorrow. And you could trade that live with us. And you're not just trading it live with me. They filled the gap. Okay. As you can see, TLT. All right. Well, you know, just to get back to that, Brock, you know, here's your 30-year, right? I mean, all we did was come off oversold levels. Still think we're going under 190. And the 10-year really hasn't traded yet, but still all of these are still working with breakdowns. And I don't think this is low at 150. I still think there's unfinished business. Okay. Okay. Another major city next to Beijing. Okay. Yeah. Okay. So Blake, is your internet up?
Yeah. I'm good. I'm good to go. I'm good to
Cool.
go.
All right. Must
How
be
you
nice
doing?
not to have you use just a hotspot, which
That
is
was
what my dogs would get hotspots.
just so you know. Well, first of all, there was an accident apparently somewhere
Yeah.
close to where I live, and it was a big major outage for anybody who's just a fiber customer. The high speed. If you had normal internet, it was you were fine. So it was like I think they called it a node, but anyway.
Yeah.
And so I had to jump on the hotspot, which I've never done before, and it worked pretty well, surprisingly. I mean, it was a little laggy, but overall it was a good substitute. But
And
I
you were
have,
able to use all your screens with that hotspot?
no.
Yeah, see, yeah,
I had to switch
okay.
over to a laptop. It's
So you didn't
because
have
I
real
run
estate then. Yeah,
Bloomberg and JP
yeah,
Morgan, and
right.
I don't have enough juice to
Yeah.
do that. But anyway, but yeah, everything's running as of now. So let's talk a little bit about this most recent news that just came out just a moment ago. Um, the there was some news about northern city of uh, uh, Tianjin. I believe I said that correctly. Let me pull that up here for you guys so you can see where it's at on a map. Um,
Near Beijing, huh, bro? Someone in
it's
our
yeah,
crowd just mentioned it.
it's near Beijing, which is right there,
Yeah. Oh, I
which is a
see.
little scary how close it is because they're closing off all the borders.
Yeah.
But Nidish, who's in our chat room, he's from Singapore, and he said I spent a lot of time there. That's like one of their biggest port cities, and that is weighing a little bit on sentiment this morning. So the reason why I bring that up is because we are. Let's go over to the S&P. We last night. Let me go back into last night really quick. So last night, the S&P was breaking out. This was last night in Asian trade. I bought some dollar yen right here at actually 109.84 is where I bought it,
Mm.
and I bought it last night. And you can here. Let me do this so you guys can kind of see what I was thinking at that time. Dollar yen.
Yeah, very similar.
Uh, Shoot, there's the. I didn't mean to do that, but let's go over. There's the hourly of dollar yen, and this is the hourly of the S&P. So here we are in the S&P breaking out. Let's go over to the hourly. We were breaking out overnight. Dollar yen was breaking out overnight. Well, dollar yen was not breaking out overnight. Let me just take that back. Dollar yen was where we're currently at right now. Right at these prices, and the S&P was breaking higher. And I'm like, man, we're going to wake up tomorrow morning. And I also have to mention yields were going up, so the dollar yen was, pushing into the 90s by the time I went to bed. It was like at 95, right near the highs of overnight highs when I went to bed, but it was just pushing up against there. And I'm like, this could be the night that I wake up and we're trading at 110.50 and breaking out, because it all always happens in Europe. It seems like a lot of the big breaks, not all of them, but a lot of them, they happen, when I'm sleeping, of course, because that's just how the markets tend to work. Not while I'm sleeping, but, those of us in North America. So I got up this morning and the dollar yen had slipped back down to where my entry point was. And I'm like, yeah, forget it. I'm going to take it off. And the S&P is coming off a little bit as well. So now what I think is really, really important, because there's been some negative news overnight, but not all negative news. China is actually easing tariffs, that was a huge boost. That's one of the reasons why equity markets really rallied overnight. And that optimism has faded actually, as we come into the European session. But what I'm going to be looking for is really this breakout point at 33.30 or so, because, and I just tweeted about it. The S&P, it's so early in the day, so early, but we could be setting up a shooting star, especially if we close negative. So I have to get you guys try to imagine things. Let me see, SPX. Let's use the CFD for.
Imagine a negative candle.
Exactly. I'm trying to. Hold on.
John Lennon. When John Lennon traded,
Blake,
that's
China easing tariffs like spontaneously. What does that tell us? Because am I the only crazy person to not take that as a sign of optimism?
Well, they need help.
Exactly. So is that something the market should take as a positive?
Well, I mean, it also should be viewed as, maybe they're making some concessions here.
Out of necessity, though, which says enough.
Yeah, right. Yeah, that's true. So, but let me just draw this for you. Let me see. I want to do it red. Do it like, no, I want to do it like this. So let's say
pen is blue.
The goddamn pen is blue. Ooh. But let's say we close negative today, right? And I'm trying to draw here like this. Then that would be a shooting star reversal. You guys like my drawing here? So that would be like a shooting star reversal, because you'd have this wick, and then a reversal. And if we close back below that level, that would be bearish. It's so early in the day, guys. It is so early. I don't want to, get you guys, thinking, oh, that's what's going to happen, because we're far from that. This is like the best environment to be in equities right now, from not you guys. Yeah, I know we could sit here and argue about, oh, it's overbought. It is overbought, but interest rates are low. We're minus the coronavirus, everything else is actually a pretty good environment to be long equities. So that's why the equity markets are kind of pushing higher all the time, because it's like, why fight it? That doesn't mean that I personally think that the negative implications of this coronavirus from a growth perspective is going to weigh on the markets. But yesterday's argument by most of the market participants, you could hear it on TV and on social media. Oh, well, the US is going to be mainly unaffected by the coronavirus, and it's going to be mostly a Europe and China problem, so let's buy US equities. That was the excuse yesterday. Is it a good excuse? Is it a valid excuse?
Hell no.
Yeah. What's that? Oh, I thought
I said hell no.
Well, yeah, but it was the quote unquote the excuse the market was using, right? So I guess, but here's the thing.
One of those lovely excuses. We got a hurricane. We got like $2 billion of damages. Oh, that's great. I mean, GDP positive. Yeah, sure, of course. Why not? I mean, let's get out there and start destroying everything. Then we can rebuild it. and
Right.
get
Well,
increased GDP. Now, the fact that we're destroying factors of production to restore what we previously had, which isn't, productivity positive, who worries about that? Anyhow, we're going to buy everything with debt.
so let me give you a couple scenarios going into non-farm payroll tomorrow. So I was thinking yesterday, I'm like, okay, stocks were on the rise. I'm like, we're going to blow out overnight. It really looked like it at the end of the day yesterday. I was sitting there at the end of the day yesterday going, okay, we're going to break out. We did. But what I was thinking was going to happen is we're going to continue to break out, right? And I thought, oh wow, the dollar yen's going to scream past 110.50, and then we're going to get a good non-farm payroll number, and then the dollar yen's going to scream up to 111. That's what I was thinking. And then I got up this morning. I'm like, oh, we couldn't even break 110, and stocks look a little not as exciting as they did last night. So now I want you guys to think, okay, well, let's say I'm just I'm putting scenarios out there because I don't know what's going to happen, but I like to be prepared. So let's say we close back, for argument's sake, let's just say we close back below the breakout point. Stocks look a little weaker. Dollar yen is trading here at 109.84, 85. But let's say by the end of the day we slip back to 60. Well, if we slip back to 60, you have a really good opportunity, in my opinion, because if the stock market breaks out, or excuse me, if it's a strong number, the dollar yen's going to make a run for that 110 level again. But if it's a bad number, which I don't think it's going to be, but if it is, then you could be short dollar yen with stops above 110. So, or if you're like, okay, well, Blake, I'm already way ahead of you. I shorted the dollar yen when it was up here in the 90s overnight because you're a European trader and that's what you did. That's great, especially if it slips back down to the 60s, because if it slips back down to the 60s, you could theoretically put your stops near break even or just above 110, and then you cross your fingers and hope for the best. You hope for a really crappy number tomorrow, and then the market sells the dollar yen, and then you're golden. And if it's a strong number, which I do think it will be, I think it's going to be a decent number. But let's say it is. Next thing you know, you get stopped out for break even or not much loss. So I think we're going to be presented some opportunities for tomorrow's non-farm payroll based on what happens today. But I just want to give you guys some food for thought because, well, that's what I've been thinking. Now, I want to go back to the euro, and or I want to talk about the euro really quick. The euro, and I just read a note from Deutsche Bank, and I gave it to the guys and gals in our ForexAnalytix chat room, that they are noting that the euro is the ultimate funding currency, and that has been my argument for a long time. But you're hearing more and more about it. Boris Schlossberg from BK Asset Management, he was tweeting about it last night as well. And it's true. The euro is the ultimate funding currency, just like the yen was back in the mid 2000s. So what that simply means is, and we saw it, and I heard one of you guys say, well, it was end of month dollar selling. Yeah, I think that helped compound the issue of the euro rally last week. But if stocks go down, I assume that the euro will spike up. That's not to say that that it's going to be sustainable. That I do not believe. But I think that the euro can spike higher based on risk aversion. So if stocks do come down, you have to be very careful being short the euro. Everybody's pretty bearish the euro dollar, rightfully so. I don't look at it and say, no, that's not right. I think there's a lot of support down here, but I can't argue the fact that the euro,
DSI 13, Blake.
Yeah, the DSI is very low, which is scary for sure. But I don't argue that the euro dollar doesn't look, weak. It does, and I think break below this 109.70 would make it look really weak. I think that would target down here around 109 and change. Like I think Amanda was targeting 109.20 or this 127% extension seems pretty doable down here, or previous lows. So if stocks continue to grind higher, the euro should continue to grind lower. And right now, as it stands, the S&P 500 is not breaking down. Yeah, it's stronger. It's breaking out. And we're still grinding higher. Like I said, it's early in the day, but as long as we can maintain our bullish poise in the stock market, the euro really has nowhere to go. So I just wanted to make note of that, because I tried trading the euro on the long side on this dip. I tried to buy it down here at the I tried to buy it a couple of times. I bought it at the 618, which was 110.16, as this 618, if you guys don't know what it is, right here. Okay, all the way down here. Okay, I bought that 618, which came in at 110.16, made some money on the rally here. And then as it dipped back down into the 50s, I tried to buy it again, thinking, oh, the coronavirus is real. It's gonna take us higher, and then it didn't. So it came down and just stopped me out. So I've tried to trade it on the long side a couple of times over the last couple of weeks, and overall, I would say down, because the first one was a decent trade. The second one was worse. So I'm just kind of leaving the euro alone. I don't, it's too weak for me to be buying it, but it's too oversold down here for me to be selling it either. I'd be more in the camp of trying to sell it on a rally back up towards, the 110.60 or so. But for now, I'm just leaving it alone. But I thought I'd make note of it, because everybody's kind of focused on the euro at this point. One of the other things, stocks seem relatively bid right now. We have a nice inverted head and shoulder pattern that's developing with the Aussie dollar. If we can break out, this news in China is a little, I would say, it would be a little nerve-wracking if you're long the Aussie for sure. But that's a big if, right? You have to really get a breakout above the 38% retracement here in order for it to loosen up to the upside. But it is a setup. It is possibly an actionable idea. That's why I'm bringing it to your attention today. I guess, one of the other things that little concerning overnight, gold, which looked like we came out of this ascending channel, looked like it was going to break down, and then overnight we busted higher, and now we're holding the breakout point, which I don't say overall I'm surprised that gold's not rolling over. But based on the current environment, I thought gold would be weaker right now. And I'm not trading gold at all, just so you guys know. But the fact that it's, it bounced higher overnight, maybe that was an indication that, the stock market really wasn't going to gain any legs, or maybe the dollar yen wasn't going to break 110. Because I think in order for the dollar yen to break 110, we probably need to see gold weaker and, really rolling over. But that's not the case as of right now. So just just keep an eye on the yen, keep an eye on equities. Equities still are really bid this morning. We're going to gap higher. So, where we close today is going to be really important. Like I said, the euro's off my radar for now. It's not, I'm not even dealing with it. The dollar yen, it's right up against really key resistance here. And everybody should know that a break above 110 or 110.10 would be pretty bullish for the dollar yen. But I got to see the whites of their eyes, versus just making an assumption it's going to happen. I think it's important that you see a breakout, and you have to see probably a breakout in, you have to see yields really surging again. You got to see stocks moving higher. There's a lot of things that have to happen in order for the dollar yen to really break out. But it's got an insatiable bid It is not backed off at all. And that's one observation that I have to make, is that, you know, you look at the dips in the dollar yen, and even though we came out of an ascending wedge here, the dips are minimal, very minimal. And, you know, because of that, it's going to be frustrating a lot of shorts, given the fact that it's just not falling. And the longer it holds up here, the more bullish it becomes. So, you know, you could probably even look at it like something like this. I'll just makeshift draw this really quick. Something that looks like that. You know, the longer we sit up here, the higher the risk of the upside breakout is. Okay. So anyway, just some food for thought on all those things. Now, remember, guys, if you want to be part of the ForexAnalytix community and join and jump in with me in the chat rooms all day, I am right here. If you're looking at your platform right here, you can have access to the chat room while you are taking your trial period. It's only $1 for 10 days. After that, the pricing you can see here, we have premium and we have light. The light version doesn't include the chat room, so just keep that in mind, and not the advanced analysis. But you can get the mobile app with everything.
Well.
What?
Not patterns in play as well.
No patterns in play. Very good. And you know, but you have all the notifications on your mobile device for all the basic technical analysis, support and resistance level breaches, you know, news that comes through, all the other tools that we have, just which is you can you know, see all of our, you know, different features that we have on our features page. So anyway, guys, I'm going to pass it over to my colleagues Steve and Stelios and Dale. I hope you guys have a great day. Thanks for joining in.
Thank you, Blake.
I appreciate you all being here.
Thank you, Blake.
Thanks, guys.
So how you doing, guys? Everything good?
Good still. How have you been?
Does DSI stand for dumb statistic indeed?
Oh, it's a good. I like the DSI. It's just that sometimes things remain at extreme levels for longer than you think.
Than your wallet could take. Yeah.
Yeah. But it's a good indicator to use.
I know.
As an
In
I like it.
combination with other. Yeah.
I know you know.
Yeah.
So what have we got today? Well, first of all, the pound is dropping a little bit because there were more headlines. I don't remember the exact headline, but the EU have started playing hardball already. They're saying lots of things that look, if you're going to be out of the EU, we're going to change regulation. They're targeting financial services, which we know is the UK's, well, top export. So the Europeans are playing hardball. We have to realize, though, that this would be bad for both sides. They know it very well. So they're going to talk the talk, but in the end, what's going to happen is a different story. With Blake very correctly said, you know, this town in China, big port, very close to Beijing, on lockdown. Equity markets still don't care, still up, but you know, this is going to disrupt things for sure. You know, it's definitely not something to say, look, this is all in the past. There's going to be a cure or vaccine moving on. I don't think this is the case. I hope it's not, you know, a huge pandemic or something. I'm not saying that, but I think we will feel the effects of this in the coming months. And
everywhere except the stock market.
Of course, no, not the stock market.
Yeah.
Everywhere else.
Yes.
China.
I'm pretty sure that if things get, you know, really bad, Stelio, they're going to build up a scenario that, you know, reduction of Earth's population is very bullish the economy.
Yeah, somehow, yes, maybe.
Yeah, they're going to manage to spin it in a way, in an amazing way that's going to seem growth positive.
Yeah.
Or the spin will be, because things are bad, the Fed is going to get aggressive in easing.
Yeah,
and even call it QE.
Although to be honest, you know, you have to start wondering, okay, you know, what else is, you know, considered to be aggressive in easing. I mean, they claim that we have one of the best economies ever, and they're doing QE and cutting rates. So, you know, what next?
Yeah.
Yeah.
Let's see. Okay, speaking of China,
we just got initial jobless claims, by the way, a little bit weaker than expected, but nothing to write home about. I mean, more or less
Yes.
as expected.
I think a weak number would kind of be a shock for the market tomorrow.
The thing,
kind of on the narrative of, where U.S. is fine.
The thing, Dale, is that the market is so artificially supported that whatever negative we get, the market dismisses within usually 1, 2, 3 days max. And amazingly, the rebound that follows in risk assets is multiple times the sell-off that preceded based on X negative factor or X negative news. So, for example, we get
who would have bought Friday's close?
Yeah, exactly. We
know what I mean? And then
exactly,
in
we
3
get
days,
coronavirus worries,
right?
And the market sells off like 3%, and then without
that's a buy on the close Friday.
And without even getting some really positive news, the market completely dismisses it and rallies 5% from the lows within like 3.5 days.
Well, keep this in mind, Steve. That would you call that violent price action? I would.
And not so much, because violence
come on.
usually
new highs in a few days after that sell-off. That's pretty violent.
Yeah.
All right. Okay.
I mean, in the sense that usually people correlate violence with big sell-offs as well.
Down.
Which we don't have.
Well,
yes.
Violence is just real extreme market movements, which reminds me of the saying that markets top with violence and bottom in silence. And we're certainly getting, this certainly isn't silence. And it certainly is the most violent trading action I've seen, quite a few years of trading action. It's pretty violent.
The VIX agrees with you. I mean, we're at new highs and we're nowhere near the lows in the VIX. Nowhere.
So holding the breakout.
Yeah.
Okay. Actually, we have a friend here who says that this whole China story is positive for the US and stocks because many US companies will make a fortune by selling services online to China. Now, this would be true if the US wasn't importing a crap load of stuff from China, which is going to get reduced. And what's going to happen after that? You get higher prices because you're going to get them from elsewhere, either locally or whatever. And actually, to produce things locally, it's not something you can switch on from one day to the next. So,
Stelio, the narrative, we had this discussion yesterday in our Skype channel, with everybody in the company. The narrative is what we say in Greek, monazi gadi gatus, which means,
either way you win.
Either way,
lose.
Either way you win. Meaning, we get big consumption data. The market completely dismisses the fact that this is built on extra credit from the consumer. Oh, this is a strong economy. The consumer is resilient. The consumer is healthy. The consumer is optimistic for the future, so they don't mind going deeper into credit to consume. And this is a consumption economy, so we're doing good. Now, if there's going to be, let's say, a problem with China, the new spin is going to be, okay, fine, we can't import any more stuff from China. Perhaps that's going to bring jobs back to the US so we can start rebuilding factories and producing what we had been importing from China. Of course, this latter scenario completely dismisses the fact that that's going to mean a huge tax on the average consumer, because the products that they were buying for X, they will have to buy from one case scenario from the second cheaper source, which is going to mean a higher price, or they're going to have to buy less of it, or they're going to have to buy same amount, same price, but inferior quality. So yeah, you can have it both ways. So you either believe that the US is a strong economy based on services and consumption, in which case getting your main vendor financing supplier, because China is not only the main supplier for multiple products of the US, but it's also vendor financing the US, meaning they sell the US tangible goods that are actually need several factors of production to create: labor, materials, investment, etc. You name it, capital, you name it. And what do they get in return? IOUs. They get in return treasuries, in essence, right? So you can have it both ways. So decide what kind of an economy you believe the US is. If you believe that the US has a sustainable consumption model, which there isn't such a thing if you ask me, but that's a different issue. The vast majority of people would claim that. Then no, there is no positive spin in what's happening in China for the US. If you believe that the US can really benefit from getting jobs back and creating production that has long gone away, which I doubt it, because they will just start buying from the second cheapest source. So in essence, they will be buying more expensively and steal from abroad. Then you have to accept the fact that paying more for the same products is like taxing the consumer, which is definitely for such an economy negative.
Yeah. Okay. I mean, it's you're absolutely. I agree with you. It's a long conversation to have, but yeah, I think you're right. Now let's move on. Speaking of China, Blake did say that they announced that they're going to have duties on, I think, 75 billion of imports. So that's on Valentine's Day. So that's a nice, friendly Valentine's Day present. So that's brought a nice little.
That's real romance, right?
Move. Yes, yes, and finally, data-wise. We didn't have anything major. Retail sales out of Australia slightly worse than expected, but really it is not moving the needle. We did have German factory orders expected plus 0.6% month on month, came in at minus 2.1. So another, pretty bad number out of Germany. And overall, we've seen some green shoots recently, but overall still in a pretty negative territory. And tomorrow, non-farm payrolls, the usual. I think we're all waiting for that now.
Yeah, tomorrow we might actually get some decent movement in the markets, and hopefully some more clarity. Although, to be honest, the past few months, this is a very, very tricky market. Every time you see something brewing, something starting, usually within a few days we go back to the usual abysmal type of market environment. But it is what it is. I mean, we have to deal with that until we have a different environment to trade at. And it needs patience. I mean, proper selection of what you trade. For example, I didn't want to interrupt Blake before, but he was saying that the path of least resistance in the Euro USD remains lower since we didn't manage to break higher, and that is very true. But on the other hand, I mean, think about it. Back here, summer 2018, I even remember when we were in this triangle. I was in a hotel actually at the end of this triangle, and I was watching price action, because prior to this little triangle here, we actually had the last time that this market was really moving. So I was, looking at this triangle, expecting the market to resume to the downside, because when you enter a triangle, from the, after a strong move, you expect this to be a continuation formation, as it happened actually, because, we went from 116 when we broke out to 113. So that was the last move lower. But back then in, 1.5 years ago, the market was trading there. And after 1.5 years of what is the definition of a downtrend, and the definition by the sense that we have lower highs during that time, the market is lower less than 7%. So the question is, okay, yeah, this is the definition of a downtrend. If they told you that a market is going to be in a downtrend for 1.5 years, and then you realize that if you stayed with that for 1.5 years, you would have made less than 7%, what would you think about it? You would be like, really? I have to be invested in this market for 1.5 years to make 7%? I'll do something else. And this summarizes what I think about this price action in the dollar and Euro USD. Yeah, the dollar is still in an uptrend. I mean, you can see it here, and you can even better see it actually on the weekly chart. Here's the weekly of the dollar, right? The Euro USD is in a downtrend. Here it is. But what have they done? Just if you take it on a weekly basis, they've done nothing on a per week basis. I mean, let's say this has been going on for like 80 weeks. So we have like 7% divided by 80 weeks. It's like this thing, you know, these tickers are moving like less than 0.1% lower per week on average. I mean, come on, there are better things to do than, you know, trying to, you know, get yourself involved with Euro USD and hoping that it might finally start moving, you know, more strongly. So my general thesis about the Euro USD remains, which is the following. We remain in a downtrend because we haven't managed to, you know, produce a higher high. But then the first violent move that we're going to see is probably going to be to the upside and not to the downside. So, you know, you want to be short, you're in the right side of the market, but you might find that you will be collecting pennies in front of an upcoming train for perhaps even months to come, right? No argument there. And somebody can say that if you choose the right pair against the euro, you can also make a very nice overnight profit by, you know, by having positive carry. Sure. I mean, if you have a big wallet and you can have like a big position of something that is decently yielding for 2020 standards against the euro, you can be collecting daily carry. But, you know, if you're looking for pairs like the euro USD and you're hoping that you're going to make a killing by being short, I doubt it. Personally, I really much doubt it. You think it's all about the virus, Courtney says. No, it's not all about the virus, but the virus can prove to be, you know, something that is market moving. If, and hopefully not, because, you know, we want to get this market moving, but, you know, not due to a death toll of, you know, humans. I mean, you know, there are many more reasons that are 100% related to finance and the economy that the market can actually decide to sell off on and be more volatile than needing to, you know, to have people dying over it. Dale Gautam says, agree with your call on lower yields. Another major city next to Beijing is now on lockdown. By the way, speaking of yields, another period of divergence between what yields are doing and what risk assets are doing. For example, if you take the 10-year yield, here it is, which, you know, is clearly in a downtrend and has clearly broken down. We've now rebounded. We're retesting some previous support as resistance. So I wouldn't find it unlikely to roll over lower from here. Definitely, if we see some risk off, that should be the case. But now, if you overlay the S&P to that, okay, there it is. And you'll see here that, you know, usually under normal circumstances, we have, you know, a positive correlation because between what risk assets are doing and what yields are doing, or otherwise you want to say it, an inverse correlation between what indices are doing and what bonds are doing, which are inversely correlated to the yields. Okay, so as you see, we have another decoupling here. I mean, we were trading along with a risk here for a period, and then the S&P started shooting higher along with the rest of the indices, of course, especially the US indices, and, you know, the yields clearly diverging. At some point, this inversion of the usual correlation will have to recouple again. So depends. Do you believe that yields are going to start moving aggressively higher from here? Do you believe that the S&P should move lower than from here? You know, it's a matter of interpretation. It's, you know, it's not the most logical thing that markets usually do recently. So, you know, just this gap has to start closing somehow. We had a question also about crude, and, you know, let's more specifically, let me find how it was stated exactly. Gautam also says, Steve, oil looks to be headed to $40. OPEC cuts, even if agreed to by Russia, will only be for April delivery. So near-term glut and inventory spike likely. What do you think? I think that as long as, first of all, I think that this move lower has a lot more impulsive characteristics than the rebound higher. So yes, I do agree that the path of least resistance remains to the downside. Also, if you want to look at it in the shorter term, I mean, this rebound has been very shallow still. So yeah, I'm with you. I'm in the sense, even if we get a stronger rally in crude, I think that looking to sell the rallies is the right side of the market to be, as simple as that. So I do believe that, and if you also want to have a look at it from a weekly standpoint, just look at this. Because sometimes, zooming out and looking at the larger time frame is indicative of what's happening. We had a very impulsive move lower. Nobody can doubt that this move lower, from 77 down to 42 was impulsive. Just look at this. We had 2, 4, 6, 7 consecutive down weeks. Then we had a very, very, very weak recovery. Then we had like another monstrous week down. And then we started having this triangle, which was clearly corrective. And now we've broken down below that once again. So what I'm expecting on the weekly time frame is another leg lower from here. And if you want to count equality, let's fib extend the first move lower with the end of this correction, and that would actually point to a move towards $31. Now, do I think that crude is going to be going directly from here to $31, in a straight line? Absolutely not, right? But do I think that, the path of least resistance is higher? Absolutely not as well. I mean, I do think that against roughly, let's say 55 now, you should be looking for lower prices in crude. Ziggy has an interesting comment. My daughter works for Marriott. She's working on scheduling several conferences around the world on the virus for the next few days. Governments want Marriott and others. I'm assuming by others you mean other, hotels, companies, etc., to agree to take infectious people in quarantine. Marriott's answer was no. Do you want to kill our business? Was the argument, which makes sense. So that tells you enough about if and how much constrained the problem is for the time being. If you remember, I immediately said when we had the coronavirus issue that I do believe that most likely this is not going to end up being a long-lasting negative effect on the markets. But on the other hand, I didn't really expect that before we got any real positive news that the markets would be shrugging it off like it's completely non-existent. I expected that the problem might go away a lot faster, and in that case, such a fast recovery from the markets would be expected. Another alternative, I would expect that, if it lasted longer, we would have, somewhat of a bigger sell-off. But a combination that, we wouldn't have positive news and immediately the markets would be at all-time highs, to be honest, that I didn't expect. Not that I'm extremely surprised because, let's be honest, we all know where this bid is coming from, and we know that it's not based on real investor sentiment. If it was, we would never have been up here. Reports data, double standards. We all know this. What do you think about the DAX? Yes. Okay. Since we had a look at, which is a health thing on the weekly, let's have a, look at the weekly first.
Steve, yesterday, besides Tesla being sharply lower, most of the FANG stocks did not participate. Just because oil finally got a bid, the oil shares were leaders yesterday, and they rotated into value, where FANG is growth. And so the rotation of unloved stocks finally started to come in yesterday in a big way. So the leadership is shifting. I don't know what it means. To me, it means that, they're just looking for, there's no such thing as getting out of stocks. It's only rotation. There used to be a time where, you would get out, but now all they do is go from group to group. But it's hard for me to believe that we're going to sustain this market without FANG participation.
Oh, I agree with you, definitely. I mean, it has been the steam engine, and if it stops being, it's going to be very hard to do so. By the way, Tesla, you remember we weren't here. Yeah. I mean, very adamantly, I said that day here that, this thing is going to blow up like, pretty soon. And this is another very obvious sign of what Shiller calls irrational exuberance. What has fundamentally changed for Tesla between January 20th, which is like 15 days ago, and today? The answer, nothing. That didn't actually stop Tesla to within like, what is it, like 5 trading days, whatever it is, to move from that day 64% higher, and within then 1.5 days to move almost 30% lower.
Would you call that violent?
Oh yeah. I mean,
okay, see what I mean?
Yeah,
Violence.
unquestionably.
Yeah, okay.
Unquestionably.
Even Ralph Nader had to come on and make some comments on CNBC yesterday. He drove his Corvair to the studio. You know, that's what made him famous was, you know, the Corvair was a Chevy that would roll over. And he was talking about corporate governance and Musk and the SEC being AWOL and investor protections, and banks always only tell people to buy, they never tell them to sell. So Ralph Nader, they gave him a pretty hard time, like, you know, well, Ralph, if you're going to be a stock analyst now, what's fair value for Tesla? And he didn't have an answer. But anyway, you know, Ralph Nader's a pretty rational guy.
Needless to say, Dale, that 4 months ago, the market assigned a market valuation to Tesla roughly equal to BMW. No need to explain what kind of a company BMW is, okay? And how many years it has been out there, etc., etc. So 4 months ago, the market thinks that Tesla is worth as much as BMW. Personally, I wouldn't hold my breath about that. 4 months later, the market thought that Tesla, within 4 months, is worth 4 times BMW. Now, is there any chance that this market is rational and it can be right in both occasions? Just answer that. I mean, let's not have an argument of if the right valuation is 1 time BMW, 4 times BMW, or something in between, or something not close to that. But the question is very simple. Can the market be right in both occasions?
The short squeeze of all time.
Yeah. I mean, as simple as that, right? And that tells you all you need to know about this market. Okay. So we have questions about the metals, all of them actually. So nothing has changed having to do with gold. I indicated that 1550 is a, you know, important support area, and guess what? We're holding. So, you know, there is no technical argument. Anyhow, there's no fundamental argument, but there's no technical argument from my side that can tell you, oh, you really need to short gold. I mean, I'll tell you the following. If you're really convinced that you should be shorting gold, then I would be looking for this area to do it. So you want to be short gold anywhere between 1570, 1575 is the place you want to be short gold, okay? With a stop loss above the highs. So you want to be short, this is how you play it. There we go. But on the other hand, you know, against like 1550, like, okay, let's take the low 1547.4. You know, in my opinion, just don't be short gold. I mean, you can be, you know what you will be risking. But, you know, if your long-term thesis is that, you know, it's going lower just because it moved down from 1592, I think it's a weak one. Okay. Silver, more or less the same deal. You can see this formation here. This still looks to me like a corrective bullish formation, in which case I would expect, this is the 4-hour chart, by the way, okay? In which case I would expect that the break higher from this formation should lead higher once again. Now, we drop below like 1720, then you can, you know, you can start, you know, talking about the potential of, you know, a bigger downside. And to cover the other two that you're asking about, which is platinum. Platinum, nice rebound. If you remember, I mentioned that, and we drew that actually quite some time ago when we got rejected from there. I said that, you know, platinum might move lower. 950 is the first area of support. If we break through that, we might then go even lower to retest the broken long-term trend line resistance as support before we move higher. We have rebounded from the first support, but pay attention here, because if we actually fail to move higher from here, you don't need to be a genius to see the potential of a head and shoulders formation here, right? So platinum not yet out of the woods. In order for it to be out of the woods, we will need to see this not developing into a right shoulder, but more like a consolidation before higher. And palladium didn't make it to new highs, so this leaves one more potential, that this is like a big corrective triangle, in which case don't be surprised if you see, let's fib this. Don't be surprised if you see a deeper pullback and some longer term consolidation between, let's say, 2,500 and 2,300. Okay, so this is now a scenario. We might do something like this. Of course, if that proves to be the case, that is bullish, right? If that proves to be the case, if this is the pattern we're talking about, it should eventually break higher for one last move to the upside. And I say last because usually triangles are terminal formations, okay? But, you know, let's give it a little bit more time to determine what's happening here. Regardless, having seen that we got rejected before new highs, the risk reward against yesterday's high is favorable to the downside. So it makes sense if you want to be short against, what was the high yesterday? 25.02 or something like that. So that would make sense, okay? Now, of course, given that this is a violent ticker lately, you should adjust your leverage so this can't actually hurt you. So I wouldn't be advising for you to use the same type of leverage you would use if you were trading Euro USD, right? That would be probably stupid, because you can end up making a lot more money than what you expected. But on the other hand, you can end up losing a lot more money than you would be able to tolerate. Now, we have several questions about the DAX. So before we go to the daily chart, let's have a look at the weekly. So the weekly is showing us this. The DAX has also been in a prolonged uptrend since the 2009 low here in 3,570, whatever it is. Of course, it has severely underperformed the US indices. There's no question about it. I mean, it's extremely easy to demonstrate just by overlapping, let's say, the S&P. Just look at this huge divergence, right? So you can look at this huge divergence now that we brought them together. Just look at this. I mean, huge divergence. Irrespective of that, what remains the case is that the DAX is testing once again the previous double top up there, and despite having a very negative week last week, we completely erased it this week. So 13,600, a very important resistance area. You can be short against it, and against the high that we had like a couple of weeks ago at 1365, somewhere there, because you can see how important this zone is. But if we break higher, we can easily see another thrust higher towards, let's say, the 127% extension of this correction lower, which is at 14,500. So that's the bigger picture in the DAX. Now, if we want to go back to the daily, there it is. You can also see here, it was looking like last week that we were breaking below this ascending wedge. I mean, it was a well-formed ascending wedge, but we erased that technical event within Monday, Tuesday. That was it, and then we've spent another 2 days moving to the upside. But we yet again find ourselves in this resistance zone. Also, this wedges trend line resistance. So, would I advocate you buying up here? No, it makes no sense. So, you either have to wait to buy lower, which you might not get a chance, or alternatively, if you're looking to buy, you should look for a breakout from, the all-time highs, then a pullback, and then you can consider buying the retest of this important resistance area as support this time before buying again. So that's what I think about the DAX. Gold, silver, we covered.
It's interview time, but when you had the weekly of the DAX up, Steve, it looked like it was incomplete, and that there's was that it? Was that the weekly?
Yeah,
maybe,
this is the weekly. This is the weekly.
I don't know, maybe it was zoomed out, but it looked like a drive. Okay, yeah, that's it. Looks like a drive 3 coming.
Yeah, that we might get another high here with even more divergence, because the weekly RSI back there was like at 85 here.
Yeah.
While the weekly RSI, when we topped out there, was at 77, and perhaps a new high from here will give us, let's say, an RSI of 72 or whatever, and that will be indeed something like a 3 drive, and it can also be a longer term ascending wedge, something like, let's change the color to purple, let's remove the magnet, something like this, right?
Yeah.
Something like this.
Yeah. Okay.
Yeah, that can be the case. That can prove to be the
Nice
case.
view.
Okay, good eye, coach, good eye.
All right, buddy.
Who do we have today for an interview?
We have Raksha.
Okay.
And Raksha's made some excellent calls as our guest over the last several times, and I'm looking forward to seeing what's on her radar. So Raksha, I'm going to get you set up now. I'm unmuting you. Welcome back.
Hello, hi.
Welcome.
Dale, how are you?
Hi, Raksha.
Yeah, as I told, it's my second home, so I'm.
We need a little more volume.
Okay, just a second.
Yeah, that's already better. Yeah, it's already better.
Okay, thank you. Hi, Steve. How are you doing?
Hi, how have you been?
I'm good. I'm good.
It's pretty soft to me.
It is, but at least it's clear, Dale.
All right.
We can hear you.
If you could turn it up, it'd be helpful, or closer to the mic. I'm not sure what you're using for audio.
I think
you were always louder
clear
before.
Now? It's clear now?
It's clear. I would just like a little bit more volume, but it's okay. Why don't we go and get Steve will stop sharing, and then you could share your screen.
Done,
and
coach.
There you go. So just look for a little green box. It's a drop-down menu. Just hover your mouse above. There you go.
Okay, here I am.
Okay, and you're louder. Okay,
I think
good.
SPX is giving me that voice now.
Okay, so thank you very much for being back here, Raksha. So you want to start with the S&Ps. Tell us what you're seeing here.
Yeah. I've already written an article just, I think, a few days ago about S&P. So there was the target which I was expecting was 3354.6, which was there, and it's bang on. It's gave a little bit of pullback here. Right now, what I'm expecting is it will retest this level again, and it might go to the second target, which I am looking is 3373.50 here.
Okay.
So that's what I feel right now. The earlier immediate resistance.
How do you come up with the numbers? Is it a fib?
Yeah, it's a fib extension actually. It's
okay.
It's kind of a harmonic move. I'll just show you that point. It's kind of an harmonic move here from A, B, C, and I am looking here for the D here. So I've just extended this leg.
Okay.
And here are the levels.
Okay.
Okay, so these are the levels which actually I am looking for right now. But as it's already have made the high, a little bit of pullback is needed. A correction is possible here. So I'm just waiting for it. I am trying to. I'm just waiting for this breakout, this T1 breakout. So that is all in my SPX right now.
You're waiting for a
Waiting for
test
the
of that.
break. Yes, the test of this T1 again.
Okay.
Around 3356, near about that.
Okay.
Yeah.
And 33.39 would be kind of your first indication that something negative is happening. Intermediate resistance turn support, that level.
Below 33.39, the buyers will lose their control, I guess, because here the sellers will enter in the market. So
Right.
below this will be the sellers coming back in the market. So they might be pushing that price back down to the support range here. I'll just remove this extension so it will be clear for you. Here, the support range of 3300, this range. So a little bit a pullback till this level is expected, as per in my opinion. A pullback till this place is expected before going any further new hires.
Okay. Is this the most violent price action? You've been doing this for a while that you've seen?
Yeah, you can say so, but right now, you see, whenever in the market, when prices are flying so high like this, in this kind of rally here, since from the day of 1st of February, it's been flying high and high and high. So there might be so much of uncertainty in the market, like how high it can go. Okay, the sellers will be interested to sell at this point right now.
Mm-hmm.
Okay, so what I am expecting is a pullback back again, at least this level, the ranging level here, you can see.
Yes. Okay.
At least this level, I'm expecting it.
Okay. All right. So basically, uptrend, overdone, looking for a pullback and then a new high, or a pullback and then possibly a failing rally.
Yes. But if it breaks the support range, this of 3300, then I won't be buying at all, because this will be my bullish invalidation. This level will be my bullish invalidation.
Okay, 3,300. Okay, interesting. All right, so that covers S&Ps as usual, Raksha. Great looks, great numbers, and technical areas to pay attention to.
Yep. I'll come to my favorite one, crude.
Okay.
Yeah.
All right. All right.
So here crude. I'll just shift it to day one. Yeah. As everyone was discussing about the coronavirus, which has been hitting the market very bad, and every day it's coming up like a new suspense and new breakthroughs for the market. It's been falling madly.
Yeah.
Since the day it's been falling madly, and here was my support here, immediate support, and the target was here. I was short here actually at this level, 58. I was short here, and I've exit my trade here on the support level of 49.
Okay.
Yeah.
So now we're
now,
entering a phase of corrective rally.
This price 51, as you can see on the screen right now, it's 2014 low. Okay, so this will be acting, and it already has reacted at this level. This will be acting as a very strong resistance here for the prices. If the prices goes above this, then I'll see 56 and 53 again.
Okay,
right now I am on a bearish side only. So I exit my position because it might pull back. So I'll get better price to enter again.
Okay, so you're not, because you are considering this a bear market, you're not going to trade counter trend. You're just going to wait for areas to start laying shorts back out there.
Yes. And if it doesn't break this resistance and it breaks my support, then again I'll enter here, and then my target will be this range, 46 to 44 range. This range will be my target, or the low of the 2019, that is 44.
Okay, right. That was a low in January.
Yes, yes, that was last year's low.
Yeah, a lot of bears talking about 33 or so. So
33, only I'll wait for 33 if this year
yeah.
low is broken, not before that.
Okay,
I'm not
so
expecting that low as of now. I'm not expecting that low,
right.
but mostly I think on 44 it might jump back.
Okay, so
Yeah.
a great example of Raksha not getting ahead of the market and just what's the most important thing happening now, not, where could we be this fall? And I know I get carried away with Nostradamus kind of stuff. And really, Raksha, what do you think of this? Do the right thing today and tomorrow takes care of itself.
Yeah, of course, of course. Because see, if we will be doing a wrong trade right now, we'll be crying for an entire month or entire week or so. So it's better to stay for a week and then enjoy the next coming profits. We are
Okay.
always doing that, and just a little bit of a thing. You can see the arrows here on the chart.
Yeah, is that your new technical indicator you
Yes, that's our
you
new.
tweeted me about?
Yes,
What's it
exactly.
called
That's
again? Boom?
Bhumi. Bhumi is a Hindi word. It means earth.
Okay.
Okay, so this is our indicator. Actually, it's a complex algo. It includes our square root levels. It includes the fib ratios, volumes, the price actions, and everything. It's like you can say it's an Indian bhel puri for me right now. So it's a combination of everything here, and the results are very beautiful. As you can see, it gave me a sell here. As I told you earlier, I was sell here,
Right.
and see the plunge it gave.
Right.
So
Interesting.
this is the indicator here.
Okay. So this is a proprietary algo.
Yes.
Do you let people lease
Yes.
it, or it's just for your subscribers?
It's anyone who wants Bhumi can come and mail us.
Okay.
It's just a second.
Sure.
I'm sorry. I'm sorry. I just told you that I got a baby now.
Oh
So
yes. Congratulations.
thank you so much.
That's a very long-term trade.
Yes, it is,
Yeah.
and very profitable.
A joy-filled trade, and
Yes.
there will be plenty of aggravation. Okay, so just like the market.
Yes, it's
Yeah.
it's a very violent elite way for me.
Okay, so I
Yeah,
know
I
you're a
was
big
talking
fan.
about.
Oh, go
Yeah,
ahead,
sorry,
Boomy.
please
Go
tell
ahead.
me.
Talk about Boomy.
Yeah, it's like we both were doing manually. Me and my husband, we both are trading together. So we
Right.
both were doing all the manual work, and also one day we just came and sat and just made all the listing of our whatever studies we do, whatever kind of research we have done. We have written all those on paper. Then one of our co-partner and friend Rakesh, he has compiled all our ideas into this coding, and right now it's actually working very good. And it's just not because it's my indicator, so I'm just blackballing about it, but people are saying very good things about it. And as you asked that it's a proprietary thing, no, anyone who wants to use it, even we are giving it for trial also, they can come and email us also, or they
Okay.
can come
What
and
a
contact us on
time
Twitter.
saver.
Yes, it is indeed.
So okay, so let me ask you this, and I
Yeah.
know it would be for me. Even if I had Boomy, I
Mm-hmm.
would probably, at least for a while, still be
Mm-hmm.
doing all the work manually or paying attention to the market myself.
Mm-hmm.
Have you let go using Boomy, or do you still find yourself attached, at least for now, until you really really ready to let go and let an automated signal do all your work?
Bhumi is for the shorter term, like for maximum 3 to 4 days or a week of for trade. Okay,
Okay.
if I'm going for a long term, like if a good 10 to 15 days trade, then I'll go for my own technical analysis, right? but it has saved a lot of time for me. Just keep sticking to the laptop all the time. I remember working till 4 a.m. in the morning, till when we were sleeping at 5, waking up again at 9. Now we have got time for a baby. Finally, we got something so that we can have some personal time now. So it has actually helped us a lot. We don't have to keep just scrolling all the these levels and all. We work on a monthly basis. We calculate all our levels on a monthly basis. And when, if at a support or a resistance range, if that indicator is giving us a buy or a sell signal, then we have a strong confirmation that, okay, let's go for it. Just like here, as you can see right here, it was my support range. It just broke it, and then I just took it right exactly on the same point. So it actually has saved my work a lot. Okay. Now the rest of the part with this analysis part, it's my passion. So I just keep on doing it, just making charts and just playing with the levels and all, just looking at the harmonic patterns. It's like, I just love this thing.
It's like being in the mafia, you know. It's in your blood.
Yeah,
it's like
you
being
can
in
say
the,
so.
huh?
You can say so.
you know, Hotel California, you could check in, but you can never leave, or you could check out, but you can never leave. So I know that you're following the dollar. That's another one of your trades. I don't know if you want, we're prepped for it, but
in dollar also.
does it look like par is coming? A lot of people are saying that 100 is a layup here. Do you think so?
I'll just show you. I have something for you in dollar, because I am actually tracking it. See, here the box, the resistance, this resistance level 98.48 to 98.32. This is a resistance level here. If it breaks, it will go max to max. I can think of is 99 as 100, you can say. But in between that, this level is very important. 98.68. This level. So I don't think, if first thing first is this resistance, this resistance range, it's itself a very strong one. Okay. So if it breaks, then we can see anything above 90, 99. And
you
so
just got a buy signal today on booming.
Yes, I'm just looking at it right now. It just gave me, but it's on a daily time frame. It works on daily time frame, but it works better on a 4-hour time frame. So it gave me it gave me a buy here. And
nice.
For the resistance till this point. It's a buy here already. So right now, this white zone, for me, it's a no trade zone. I don't enter in this white zone. I just only enter either in the red or the blue zone.
You know what I've noticed about what you're showing me with your algo? That a lot of people, you know, have a psychological obstacle that if they don't catch the top or the bottom, they feel they're late. But every signal that you've shown me that, and many of them worked out, we're kind of midstream in a move. And what's the difference if you catch the top or the bottom? And I'm self-talking. That a lot of people, if they don't get short or long at the turning point or very close to it, feel like they missed it. And a lot of the signals that you're showing here are well after a move is underway, almost midstream, halfway through. So it proves to people that if you don't catch the turn, and you don't even have to catch the turn, you can make money after a market is even halfway through its move.
Yes, of course.
I know you say of course, but no, I'm telling you, you may have felt this before. I missed the top in the dollar index, so I have to wait for a reaction or something to get in, and it's never a good enough price because you didn't pull the trigger at the optimum time. That psychology.
Reason I'm telling you right now is I have been reading a lot of trading psychology books right now. Meanwhile, I got so much of time for reading all those things. So one thing which I've learned right now is even if you miss an impulse trade, just wait for a correction and enter in that trade, because if there is an impulse trade, of course there will be one more leg for that. So in that case, yes, your profits will be short, but you won't be feeling it. It's it's for the people, as you said, who don't like to be like, who don't like to miss out of any rally or any plunge or any trade. So right now, if like, just like here you can say, if I miss this one, I again have this trade in my hand. So something or better for the people who are very itchy for the trades, they have
Yeah.
to trade in any sense. They have to have some profits, or they scalp, the scalpers, the
Yeah.
scalpers need these kinds of rally or these kinds of moves in market. They can catch it easily and they can trade about it.
Okay. So really, it's the lesson is there's always another entry.
Yes, market is ever going. It doesn't stop for you. So you should also not stop for it. That's what I have. The one thing which I got a change in my trading psychology is it's ever going, and it's never too late to enter in a market. There is always an opportunity. If you miss one, don't worry. Just wait for it and get for the other one.
They're
In that case, you will
like
keep on if you
buses.
really like trading. Yes, like buses, of course.
Yeah, you
So
miss a
you
bus
just
doesn't mean you're not going to get to your destination.
exactly.
Take
If
another
not
one.
bus, you can go by walk also, but you'll go somewhere. So just don't stop for one. Like if I
Yeah.
have a trade
Take the
setup.
pressure off yourself.
Yes, it's a trade. It's trading. You're doing it either for mostly for the profits, but for passion or
Not just for
profit.
the action and the
Yeah.
entertainment.
Yeah.
Okay.
Of course it is
All
for
right.
profit, but for those who are for entertainment also, and for just they love to do trading, just like me. I love to do trading. I do trading, and of course if I love my work, it will pay back to me. So
Yeah,
if
it's fun.
I have some setup,
It's not
it's fun.
work.
Every day is a new
It's
day
a,
for
it's
trading.
stressful at times, but it's fun.
Yes, it is.
All right. So tell me what it's like for you, say after maybe a string of 2 or 3 unsuccessful trades. What's your self-talk after that?
I just wait for some time. I take a break.
You
I
take
do
a
some
break.
meditation. Yes, I do some meditation.
Okay.
And then when I am fine, okay, see where I'm doing wrong, I just go and check that.
Okay.
I read some books about trading psychology, especially not how to do trading or other things like that. I love to read about price actions, how price
Okay.
has betrayed me on that level. Why did it do? Why did actually it fell if it was supposed to go up? What was the fundamental scenario? I keep on thinking about that. Then I come to a conclusion why I failed. I learn something from out of it, and then I just apply it on my other trade, the next one. So I
Okay.
just learn and I carry on.
All right. Well,
That's
key thing
my
there
thing.
is break instead of pressing it. You know, some people will take 2 or 3 losers and they feel they can't take a break because they need to get it back right away. So the key thing is take a break and reassess and maybe go through a little bit of a mental recovery instead
Yes.
of, feeling cornered and pressured to get that money back. That's revenge trading.
There's
Don't want
there's
to do
there's a
that.
there's a saying, it's my own saying, that market is very powerful. Don't go to take revenge out of it. You'll fall very badly. So just never take a revenge from market. Just wait for it and just wait for a good perfect entry. Wait for a good perfect move and then enter. It's just make it your friend, not your enemy at all.
I like that. Yeah, make the market your friend. Don't
Yeah,
seek revenge.
if you go and find this revenge trading is the worst trading and
Yeah,
most of the people fail just because of that.
yeah, yeah. The destructive behavior. So, we're getting
Yes.
some interest in Boomi. If you'd like to give people contact information, perhaps show your website so they could reach
Yeah, of
you
course. I'll just show
and
you my
get in
website.
touch with you. Of course, you could
On Twitter, we
reach
are all
Raksha
available.
on Twitter at RAKZ_27. Okay, go ahead.
Yeah.
Nifty
So
analysis.
niftyanalysis.in is our website. It's a blog page which I've written about the USD JPY crude, the price which I've told you earlier. So you can find
Nice.
the blogs here.
Okay.
If you want to go and find Bhumi, just go on Nifty analysis, get Bhumi.
Okay, Boomy.
Here, just get Bhumi, fill in the subscription form, and you'll be directed to our email directly. And if you want to email directly to us, it's numerical
Okay.
6 Nifty analysis, NIFTY ANALYSIS @gmail.com.
Okay, great. And the website address for that, it's a
Website.
blog, so it's not a website, is it? It's a blog.
No, it's a website.
Oh, there.
I'll just
Okay.
show you. That was just a
Niftyanalysis.in.
Nifty analysis here. Yes, niftyanalysis.in is the website. Here you'll get every information about Bhumi, about blogs, everything is there.
Well, Raksha, I'm so happy for you and your husband that, you know, you're bringing up a new trader, a female trader that will shatter the ceiling that you've already broke through with other women in the trading industry. And I really appreciate some very nice looks again, and hope that 2020 is your best year ever in every way.
Thank you so much, Dale. And I just heartfelt wishes for you, and the same things for you.
Oh, thank you so much, Raksha. So there's my Trading Warrior sister, Raksha Soni, and you know how to reach her now, and definitely a hardworking, ethical trader in my book. So
much. Thank you so much, Dale.
yeah, so everyone have a great Thursday, and we'll see everyone tomorrow for the NFP. Remember, don't just count your pips or whatever Boomy does for you, count your blessings, and we'll see everyone tomorrow. Adios. Good hunting the rest of the day. And thank you again, Raksha.
Bye.
Bye-bye.